This episode is brought to you by Shopify. Forget the frustration of picking commerce platforms when you switch your business to Shopify, the global commerce platform that supercharges your selling wherever you sell. With Shopify, you'll harness the same intuitive features, trusted apps, and powerful analytics used by the world's leading brands. Sign up today for your $1 per month trial period at shopify.com/tech, all lowercase. That's shopify.com/tech.
¿Hablas español?
Sprichst du Deutsch?
Kann du noch?
If you've heard that sound from Babbel before, I bet you do. Babbel is the science-backed language learning app that actually works. With quick 10-minute lessons handcrafted by over 200 language experts, Babbel gets you on your way to speaking a new language in just a few weeks. With over 16 million subscriptions sold and a 20-day money-back guarantee, just start speaking another language with Babbel. Right now, up to 55% off your Babbel subscription at babbel.com/Spotify podcast. Spelled BABBEL.com/Spotify podcast. Rules and restrictions may apply.
It's the Larry Kudlow Show. Free market prosperity starts here. Now, here's Larry Kudlow.
Good afternoon, folks. This is not Larry Kudlow, though this is the Larry Kudlow Show. I'm Steve Moore. I am substituting for Larry today because he's a little under the weather. By the way, Larry is my best friend. These are huge shoes to fill because Larry is really one of my heroes. And he was, by the way, the best man in my wedding. So I'm going to do the best I can to fill those big shoes. Well, I'll be with you for 3 hours for those who get the More Money show following this, if you're one of the affiliates who picks up that show. My mission in this hour of the show is to walk you down from the ledge, because this has been a brutal, brutal week for stocks. It's been a brutal week, 2 weeks for the economy. And I want to assure you that we are going to see a comeback because we have a guy in the White House who's the comeback kid. And I don't always agree with every strategy that Donald Trump puts forward. And I'm a little bit nervous about the tariff strategy, but I have to tell you, as someone who has worked with Trump as one of his advisors, he always seems to come out ahead. And my prediction is you want to walk off the ledge. You don't want to jump off the ledge, because I do think we're going to see a great American renaissance. And I can't tell you if that's going to happen in the next 24 hours or the next week or month, but it is coming. And I can tell you with certainty it's coming, because during Donald Trump's first term, we had an incredibly bullish stock market. Even though there were periods that were tough, it was really amazing what happened with the stock market. So if you look over the 4 years in Trump's first term, the NASDAQ more than doubled in value. We saw a 60% increase in the value of the S&P 500, and we saw a 56% increase in Dow Jones stocks. So this is a bullish president with a pro-business agenda, but you don't have to listen to me about that. We have two awesome guests right now coming on who are regulars on the Kudlow Show. Nancy Tengler, who was Chief Investment Officer with Laffer Tengler Investments, and also the best-selling author of The Woman's Guide to Successful Investing. And we have Jim LeCamp, who is the Senior Vice President of Investments at Morgan Stanley. So two at the best of the business in terms of getting stock advice. Nancy and Jim, thanks for joining. Let's have the ladies go first. So Nancy, I say this is a blip. What do you say?
Well, I agree with you, Steve. Thanks so much for having me. I think, I don't know if Jim agrees with me on this, but I do think that we are in a period similar to the 1990s, mid-1990s, where productivity growth will drive unit labor costs down and will allow growth. Even in the 90s, we had 5% Fed funds rate on average for the second half of the decade. We had a 10-year between 7 and 8%, inflation at 3%, and yet the stock market grew at double-digit rate every year. So yes. I think we're in that kind of environment with the just the productivity enhancements we're seeing across sectors, from generative AI and AI computing in general. So that's our position. We were buying on Monday, adding to some of the beaten down tech names and some new energy and infrastructure names. And we will continue to do that because we think we're still firmly in a bull market.
So, Jim, the market took a beating over the last couple of weeks. I've got sweaty palms, and I think most of our listeners are very nervous about things. How much of this sell-off is due to the tariffs?
A whole lot of it, and it's the uncertainty around the tariffs. If we knew what we were dealing with, that would be one thing. Now, I was an economics major, and I studied the Austrian school, and I'm a devotee of Milton Friedman. So know where I stand on tariffs. I mean, I'm not a fan. Now, if you're just negotiating, if this is all short-term, resetting some of these things, I get it. But in the long run, I am absolutely against it. And what the market doesn't like here is one day it's X and the next day it's Y. And the other issue is, and Steve, I know you remember when Ronald Reagan was elected, first 2 years pretty tough, right?
Brutal. Brutal.
Yeah, he had to give that speech, the stay the course speech.
Right. Yep.
And then the deregulation started kicking in, then rates started coming down, and we had 40 years of prosperity in the markets. In this case, the issue is that we're starting off a presidency at 23 times earnings in the stock market. That didn't give you any room for error, and then you have a president who's hard to keep up with. And so you don't know what the playground looks like, and now you've broken below the 200-day moving average. So, in the short term, we're oversold. We'll get a bounce. I think the first 6 months of this year are going to be pretty choppy as we figure out what these things are really going to look like. The things he's doing that are positive are back-end loaded. Deregulation is back-end loaded. Falling rates will be back-end loaded. So it may be that the market rallies later in the year, and the first half of this year we have to deal with a lot of volatility.
So great points. So Jim, on that point about the tariffs, I think I'm very much in your camp. I'm a Milton Friedman. I knew Milton Friedman. I used to have dinner with him now and then in San Francisco before he died, and he always told me that we would have these dinners with Rose Friedman and Milton Friedman. And I asked him shortly before he died, I said, what are the important things about keeping economic growth up? And he said, free trade. Free trade is so critical to the U.S. economy. So my question for you, Jim, and then Nancy, I'd like you to pipe in as well. If, and I believe I should almost say when, not if, because I do think he will get a deal with these countries. And when that deal happens, do you see the market bouncing back, Jim?
Yeah, I think we what we need is clarity, and I agree with Nancy on the industries, and I think energy will rally. I like what Trump is doing with energy. I think artificial intelligence is still very, very much a huge part of this conversation, as is productivity. And inflation's already way below what the numbers say. If you really look at inflation and you look at rents, you look at year over year, a lot of these metrics in the inflation numbers, the inflation levels are actually a lot lower than the headline numbers. So I think that'll give us room to bring those rates down.
Okay, Nancy, what do you think if Trump gets that big trade deal that we all hope he does, so we get freer and fairer trade? Do you see the market bouncing back?
Oh, yeah, I do. And Steve, I just wanted to say I was at one of those dinners that you hosted, and my favorite part was, of course, the conversation. But then when we were leaving, I was behind the Friedmans at the car pickup, and here they brought out his convertible BMW with the top down, and it was just kind of epic.
And you could, by the way, you couldn't. This is a true story, folks. And Milton, even to the day he died, insisted on driving himself, and he was so short you could barely see his head over the windshield. Like, is that a driverless car? But he was a wonderful.
He was always leading edge with the driverless car. So I guess I would say a couple things. If we get the reciprocal tariffs, it may not be. The market overreacts in the short term because the algos are reading the headlines, the hedge funds are following the algos, and they create a lot of volatility, which is great for long-term investors. But reciprocal tariffs are likely to take time. And ultimately, as my partner ABL Jr. argues, they will be deflationary. And so I think the rhetoric, this was Trump 1.0. I was exhausted by the end of February with the tweets and the flip-flops. But what we saw, as you pointed out at the top, was very strong total return for stocks over time because they're driven by earnings, and earnings growth is still, ex the tariffs, pretty robust. Fourth quarter was the best we've seen since 2021. So take a breath. I think you use this as an opportunity to buy some great companies on sale.
So we saw, Nancy, we got a nice bounce on Friday. Is that going to happen on Monday?
I don't know. I think, the market was saying it was just a technical rebound. I was up in the middle of the night and saw the futures start rising after the news came out about the Schumer shutdown maybe being in the books, or in the past. So I think if we get more clarity and the tax bill starts to roll out, the tariff noise will go down, and I think we'll start to see people anticipating what tax cuts are, what they are. We've already seen a lot of regulatory relief. The EPA, you wrote about it. Huge. So I think, and here's the last thing I'll say. Remember, even though I don't think this is good news, that Biden signed a bill right before he left office to grant Social Security benefits to federal employees with pensions. That's $13.3 billion that was paid out in the last week. Income tax and business tax refunds are up, and gig economy workers have risen. So I think consumer spending is not going to crater as many would argue. We know the high end is in good shape. I think the middle edge of the economy or of the consumer is still going to continue to spend, and that's 2/3 of the economy in the U.S.
So we're going to take a quick break, and Jim and Nancy, when we come back, Jim, I want to toss this over to you because Nancy mentioned consumers, and I'm looking at the headline of today's Wall Street Journal talking about a big plunge in consumer confidence. We'll take a quick break, and we'll be back with Jim and Nancy. This is the Larry Kudlow Show.
This is the Larry Kudlow Show. Now, back to the Larry Kudlow Show.
Welcome back, folks. This is not Larry Kudlow, though this is the Larry Kudlow Show. This is Steve Moore. I am substituting for Larry today because he's a little under the weather. He'll be back next week, but it's a thrill to be able to speak to you in front of this microphone. And we have two in the best of the business, two regulars on the Larry Kudlow Show, Nancy Tengler with Laffer Tengler Investments, and of course, Jim LeCamp from Morgan Stanley. So, Jim, I started to ask you before the break about consumer confidence. Those numbers are pretty scary. Does it matter?
I think it matters when you look at delinquencies, which are up on used cars. You're looking at bankruptcies that are up. The used car delinquency rate is at 6.6% is the highest we've seen in quite some time, and the recovery rate there is pretty bad too. So I think there is stress. I agree with Nancy that it doesn't look like 2008. It doesn't look like a financial crisis. I definitely think there is stress. I think there will be relief in falling prices. I would rather it be disinflation than deflation, but I think it's going to look more like deflation. And but the bottom line is I don't see anything like an 08. I think we're in a weak spot here. The Atlanta Fed GDP now numbers show a negative 2.4 print on GDP.
Yeah,
but I want to throw one question to you, Steve, because I respect your economic prowess. Why are they still including government spending in GDP, and how much does that number really distort what's going on in the economy?
Well, it's a great question, and I'll take a stab at it, and then Nancy, you need to take a stab, because it's a big question, and it was something that I was going to ask both of you about is, if Donald Trump succeeds in what he's doing with respect to Doge and Elon Musk, and they're able to cut hundreds of billions of dollars out of the federal budget, as I think all of our listeners know, GDP, part of GDP is government spending. So if you cut government spending, Nancy, by almost definition, GDP will fall because that component falls. I've always believed, though, that when we've had periods of falling government spending, the economy has tended to do very well. In fact, I just wrote a column on this, that after World War II, government spending went from 51% of GDP to 16% of GDP, and yet we came out of that just fine. We had the post-World War II boom. And the other one, Nancy, was during the Clinton years, when we had the peace dividend after Reagan won the Cold War. We cut GDP, government spending as a share of GDP, from 22 to 18% of GDP, and yet we had the biggest stock market boom ever and a healthy economy. So I guess the question for you, Nancy, is we are going to see some declines, hopefully, in government spending. We need to, because we're borrowing $2 trillion. Is that going to be a negative or a positive for the economy?
Well, I know it doesn't make good radio, but I just want to say I agree with everything you just said, because we both lived through that. And
right.
I think...
no, I didn't live through World War II, but my parents did.
Neither did I. I'll be one of those 100+ people collecting Social Security if that were true. Yeah, I think we know that private sector is much more efficient. I mean, hence the Department of Government Efficiency and why it is so important. We know that they're using, floppy disks at the FAA. If you can move capital out of the government, which I don't know if you remember Jim Payne, but he wrote a book called The Culture of Spending, and he analyzed, and I think Dr. Laffer has updated, how much it costs to collect a dollar of, quote, revenue, taxes in our lingo, and how much it costs to spend it. And you're underwater before you even collect the first dollar, and it gets worse after you spend it. So I agree with you. As much as we can possibly take out of the government and move to the private sector will be beneficial for the economy. And then I'm just going to point out one thing. There is a huge skew in the consumer sentiment data. If you look at where they break it out by Democrat, Republican, and independents, and Democrats, were at 91.4 in October and 41.4 in March, and on expectations they dropped from 94 to 28. So
it's
that
all Democrats,
is skewing
basically.
the numbers. A little bit from independents, but and Republican numbers, of course, are up, but the independents are down slightly.
It's a great point, Nancy, and you saw the same thing, frankly, when Biden was president, where Republican voters were extremely pessimistic and Democratic voters were pretty optimistic. I mean, it shows that politics are intervening. We've got exactly 2 minutes left, or about 90 seconds. So what is the strategy? We have investors who listen to this show. Start with you, Jim. 40 seconds for you and 40 seconds for you, Nancy. What are you advising people to do at this point in time?
So we're extreme oversold, which is 2 standard deviations away from the 50-day moving average. That's usually a good time to be nibbling, but we're well under the 200-day moving averages, and the rally Friday was on almost no volume at all. So I still think we're in a trading environment right now. Short-term traders can trade, but long-term investors
are you buying
need to
or
be
selling?
invested. Pardon me?
Buying or selling?
I think you can buy until in here because you're so oversold. But I would probably be a seller if you're short term around the 200-day moving average and just trade this thing until reality and clarity of these tariffs start to set in.
Okay, Nancy, you've got 30 seconds left. What do you say?
Okay, I agreed with Jim earlier where he said the first half is going to be choppy, but historically that has been a great time for long-term investors to step up, buy high-quality names, diversify across sectors, and focus on old economy companies pivoting to the new tech and the technology.
All right, Nancy, Jim, you two are.
From Wall Street to the White House, this is the Larry Kudlow Show.
Welcome back, folks. This is not Larry Kudlow. This is Steve Moore. I am subbing for the great Larry Kudlow because he's a little under the weather, but he will be back next week, same time, same channel. But we have a great show, as always, and we have two regulars on the Kudlow Show, Liz Peek for Fox News and one of the top financial analysts in the country, and of course, David Webb. You know David Webb from Fox News. He's a contributor there, and he's also has his own show, Sirius. By the way, David, this is kind of a thrill. For the first time, I get to interview you.
I just thought the same thing. What about turning off fair play, my friend?
So, since I've got you, let me start with you. You know the markets. You follow this stuff as closely as anyone. A lot of people have sweaty palms. Some people on the ledge right now after a couple of brutal weeks, although Friday was a nice rebound. I'm a little nervous about the tariff wars that are going on right now. I'm more of a free trade guy than Trump, but I respect what he's trying to do, which is get better deals for America. What's your take on this, David?
Well, I'm going to help everyone, including you, my friend Steve, take a few steps back from the cliff. So hang on for a second. Okay. And you and I know this about the president and about the people around him. You're one of those people. We need a path to a balanced, right? I'm like you. I'm a fair trade guy. I would love in a perfect world for it to be there right there tomorrow with a snap of my fingers. But we've got to get there. And the way to do that is to start with reciprocity, to work our way to balance, to work our way closer to fair. And, I called it all week long. Liz, I think you were on set with me at one point when I said the tariff tantrums are what encompasses all of this. And the president was honest. Look, the president said what other presidents have not said, and certainly in my lifetime, that there will be disruptions, there will be hiccups, there will be, some ups and downs here, to paraphrase it. And that's an honest answer. And the real players in the market, and Liz, you know this, you follow this, they're looking at this going, okay, this is what we have to do for now. The big movers, I'm talking the people who really matter, that move market cap. They know this is what's happening. And when you look from the outside, as in overseas looking in, they get this. They see it. They may not like it, but this is the path we're on.
So one thing that, you called yourself a fair trader. I'm more of a free trader. I believe we should have free trade even if the rest of the world doesn't. But I also think, David, that what Trump's philosophy is that because we have so much economic power, we are the hub of the world economy, that we can flex our muscle and get these things done. But Liz, one of the problems I think with the last couple of weeks is something that we were talking about earlier on the show, which is there's been a little bit of it's hard to figure out what the strategy is from day to day, because one day there's the tariff is out and the next day they're going to delay the tariff. Then it's going to be steel, aluminum tariffs. And it's hard for people to kind of figure out where this ends. I wish there were a little bit more clarity in the message.
Well, I think that's what investors want. That's what CEOs want, right. Steve. I think that's generally speaking, we're all fair traders. And I think the word fair trade is actually a very good one, because yesterday I was on TV after a guy that runs some sort of steel mill, and he was talking about very specifically, when I send this kind of steel to Germany, they tax it with this kind of import fee. When they send the same thing back, we don't. Right. And he went through 3 or 4 countries, and you kind of sat there and said, why? What's the rationale for that? What is the excuse? I think there is some reciprocity issue. And frankly, and I think Larry thinks this too, if they had just stuck to the reciprocity argument and not gone after, made up this, I don't mean made up, but kind of conjured up this whole argument about fentanyl imports, I think people would have been much more sympathetic to what they're doing. You and I last week with Larry talked about we don't like the sequencing. We'd rather have had tax cuts first, deregulation push, and then tariffs when you gained all that goodwill from the prior 2 efforts. But they didn't do that. And I do think they kind of hurt themselves by, backtracking, kind of having different voices in the White House, giving different rationales. I think if they kind of coalesced around what David's talking about, what you are, this fair trade, reciprocity, why should we pay 10.5% tariffs on European cars when they pay 2 or whatever I probably got it backwards. But anyway, why is there that differential? I have no idea. I mean, and I think most Americans would think there's no real reason for that.
I think one of the things, if I may quickly here, that we have to consider, guys, is other governmental systems. Now, in a perfect world, Steve, we would get our way, right? We would act like that true capitalist model that we all like. Problem is these other governmental systems, they subsidize, they play the unfair game in addition to tariff, and they have different systems of laws. So we can't get to that perfect solution or perfect situation, not solution, and that situation where we all act accordingly. And that's where we have to deal in the real world, which is where I think, where I see this administration working in the reality of what we have to deal with, not in the theoretical.
Right. I think, if Milton Friedman were on with us right now, who was the greatest economist of the last 100 years, he always said that we should be free trade no matter what the rest of the world is doing. He basically said, when countries put tariffs on, they're shooting themselves in the foot. But in the perfect world, and I think this is where Trump wants to get, because he has basically said in the past, look, we'll go to zero if these other countries go to zero, and they don't want to do it. I'm getting a little sick and tired of the Europeans, Liz, and the Canadians and the Mexicans, like taking some kind of moral high ground here and being so indignant about this when their tariffs are far, far higher than ours. I mean, as an example, and Trump has used this one, that our tariffs, Canada has a more than 100% tariff on many of our agriculture and dairy products. Wait a minute. I thought we had a free trade deal with them, Liz.
Yeah. So, I guess, exactly. And so these disparities have grown up over time. And I suspect when they did the USMCA, they didn't feel like they could just go in and blast all of them. And I looked at that dairy tariff, for example. Cheese is 265% over a certain level.
Ridiculous.
But we've never breached that certain level because they cheat. They cheat in other ways. And so I would go back to Milton Friedman and say, okay, Milton Friedman never saw China subsidize all their state-owned enterprises.
That's true.
So it's not just about tariffs. It's about other barriers to free trade. And when China is willing to put the government might behind steel, aluminum, all kinds of other products, and bring those products in way below cost, we have a right to push back. And I think, to Trump's enormous credit, in his first term, he really raised this issue for the first time. Americans were not really aware of how China, since their WTO inauguration, if you will, had really basically cheated on every world trade agreement. And so they deserved to be tariffed. And I think that still is the case. They have not reformed. They're still subsidizing all kinds of products that then they ship out of the country at less than cost. And they do it purposefully, Steve, so that over time their dominance of certain industries and products grows because we can't compete with them. So I think, look, I put out a piece on Friday at the Hill saying that there are good reasons for these tariffs, and in conjunction, because I think this is extremely important, with a very pro-energy message, we can attract businesses to the U.S. We have never been in a time where labor is coming down as a percentage of output because of AI and so forth, and energy is going up. We are in a very good place to benefit from that. And I think that's a very good argument for tariffs.
So for both of you, and we'll start with you, David, what do you think the chances are? I think they're fairly high that Trump will get a deal with these countries. But the even more important question is, how long do you think this will take? Because my theory is, as an economist, I think once Trump is able to announce that he has a deal with these countries, I think the market will snap back, but nobody knows when that's going to happen. What is your feeling about it?
Basing it on the other countries, not us, in this way, they're weaker. They project with their words that they're strong, but they're not. What Trump is doing conversely on our side, and to Liz's point, is increasing our strengths. It's not just peace through strength, it's economic balance through strength by increasing energy output, by doing the things they need to do to clean up our side, making America stronger. And the other countries are weak, therefore they're going to come to the table faster. Could I give you a date certain? I don't think we can have that, but they have to meet some form of second quarter reality for their own economies and based on their own, quote, governmental years. Ours is September 30th. Theirs varies, but their weaknesses will show much faster than ours. And the markets, again, they look at this. The analysts look at this, and thankfully there are tools like AI out there that can track a lot of this faster.
So, I think that's a good analysis. And the one thing I would say, Liz, that I think that the Chinese and the Canadians are making a mistake in trying this retaliation attempt, because it's a tit for tat game, in my opinion, Liz, that these countries cannot win. And all they're going to do is, if they try to dig in, Trump's just, he said he's just going to keep going higher. We don't want to see a trade war, but I think that these countries they've got to come to the negotiating table and they've got to make an agreement with Trump that we can live with.
Yeah, I think that's right.
Don't threaten American energy in Michigan when you only provide 1%. We're laughing at you. There you go, Canada.
Yeah. And by the way, it's not just Canada and China. It's also the EU. I mean, they're playing brinksmanship too. And now all of a sudden we've got, 200% tariffs on wine, which, of course, as a wine drinker, I really object to. But anyway, and I think, look, it all has to do with the fact that we're the biggest consuming country in the world. We're the biggest importer in the world. And therefore, yes, in exports are a much lesser percent of our GDP than it is for all these other players. And we can really clobber them. But you know what? We don't want to, right? We don't really want Canada and Canadians hating America. That's really not the game plan here. What we really want to do is reset some of these arrangements. And I hope that that's what people in the White House are working pretty hard on. I don't know what the Lutnick meeting how that went down with Ottawa's prime minister. I hope it was very successful, and I hope we do get some agreements, because that's the point of this, right?
Well, that's Liz Peek.
I'm sorry.
Go ahead, David.
Something that people need to realize. Donald Trump and the administration don't want a weaker Canada. They don't want weaker partners.
I know.
They want them to be stronger, and that's a benefit. Right. And your point about the Lutnick meeting, Liz, that was to establish here's reality versus bluster.
Yeah. We got to take a quick break, but we have Liz Peek and David Webb. And when we get back, I want to change directions a little bit, something for everybody to think about. What is going on with this Democratic Party? This week was tumultuous, to say the least, for the Democratic Party. They're sniping with each other. I'm going to ask both Liz and David if the Democratic Party has gone off the deep end. I think asking the question answers it. We'll be right back, folks. This is the Larry Kudlow Show.
Larry Kudlow. From Wall Street to the White House, this is the Larry Kudlow Show.
This is the Larry Kudlow Show, but this is not Larry Kudlow. Larry is a little under the weather this week, and so he will be back next week, I promise. This is Steve Moore substituting for Larry, having a great time talking with Liz Peek and David Webb about what's going on, all things policy and economics. Let's talk a little politics, Liz. The Democratic Party went further off the deep end this week. They are sniping with each other. Hakeem Jeffries and Chucky Schumer had a big fight about what to do about shutting down the government. Virtually all of the House Democrats wanted to shut down the government. It seems to me, Liz, they have become the party of crisis and chaos and mayhem.
Steve, you couldn't have said it better. My favorite headline of the week was a piece in The Hill. The title is, "Actually, Democrats are not in disarray." If that doesn't say everything,
they aren't.
Right? If you have to write a column saying no, we're not collapsing, we're not at odds, I think we all know what that means. Here I think is a fundamental question for Democrats, and it's something I've puzzled over probably too much of my time, which is this. The Democrat Party has been hijacked for years now by the far left, a group that really accounts for only about 10 or 15% of American sentiment. I mean, if you look at kind of where people place themselves, very few people put themselves in that progressive or very liberal column. And yet that's where the Democrat leadership constantly goes. And I guess it's because that's where the money comes from. I mean, they say follow the money. And in politics, that's a pretty good guideline. But they've got to somehow wrestle themselves free from that control, because it is not working for them. They are in disarray because they have no agenda other than hating Donald Trump. And that is, honestly, I think that's a fair response.
Yeah, and I think that, well put, Liz, and I think that they've become so deranged about Trump that they won't even do what's right for America.
Yeah,
even if you disagree with Trump, most of the things that he wants to do, if not all the things he wants to do, put America first. David, when I first came to Washington in the mid 80s, there were a lot of Democrats we used to work with as conservatives all the time. We had people like Sam Nunn and Lieberman from Connecticut and Dick Gephardt, who at that time was the House Majority Leader, a pretty reasonable guy. I remember we get together with Gephardt and Jack Kemp and talk about policy. That never happens anymore because the Democratic Party, as Liz just said, has become the party of AOC and Elizabeth Warren.
Yeah.
In large part, that was because the men you've mentioned and some great people, Joe Lieberman was one of the greats there, Jack Kemp as well, they were Americans first, and they had a party, and they had different views at times, but concurring views on how to make America better. What we have now, and I hope they continue down this path. Matter of fact, I want them to continue down this path because we're starting to see what happens when you get a socialist left, a disgruntled and dangerous left. These are people committing acts of violence, supporting terrorist organizations, keying Teslas with swastikas. Their activities, not just in the, quote, leadership at the DNC or AOC or Jasmine Crockett or insert any other politician elected under the D name, that is what we need to see. We as Americans need to see them and reject them to get back to where we're actually Americans who can sit around and, okay, Liz, I've got a one for you. Later on, I'll introduce you to some of my friends who own American wineries. We'll keep you well supplied, and I'll join you in that. And then we can sit around and discuss things, which we used to do the old Ebbett's Grill days, Stephen, and other things. But this is a party that's not lost. They have deliberately gone this route.
Yeah, I mean, it's one thing that's really disturbing on top of all of that is that they're, you look at who they're talking about for running for president, that the leaders on that board right now are people like Gavin Newsom, who let half of California burn down as an incompetent. You've got J.B. Pritzker, who's the governor of Illinois, which is a basket case. And then I read that they want Andrew Cuomo to come back. I mean, what's going on, Liz, with this party? Can't they find someone who's sensible?
Well, that's the thing. I mean, the guy that wrote this thing about Democrats not being in disarray said, what we need to do is take back the House at the midterms, find moderate, sensible candidates, blah, blah, blah. Here's the problem. Where are those moderate, sensible candidates, and can they win a primary? I don't know that they can win primaries. Again, I think it comes back to the funding coming from the Soros clan and so many others, and Pritzker and other people. But it's pretty astonishing that, to your point, Steve, if you look at the biggest, loudest voices in Democrat politics, they are people who have really torched their own states, whether it's Newsom or Pritzker, this terrible Michelle Wu up in Boston. I mean, their policies are failed policies. And, guess what? Donald Trump exposed that. That's why they hate him so much. And voters reacted to that. They voted for Donald Trump because they didn't want their own states to begin looking like California or Illinois. That was kind of the Kamala message, right? Yeah. Remember, it's extraordinary. Kamala Harris ran on putting through effectively a $3 trillion tax increase. I don't think there are too many Americans who really thought that was such a hot idea. And she ran on DEI. She ran on all these things that really have been repudiated by voters. We don't want to go down that tunnel. We don't want to share those values, which are not American values. We do want a healthy, strong America. And I think that's what Democrats actually just don't get yet.
Thanks, Liz. That's Liz Peek, and that's David Webb, two of the best political commentators in the country. This has been the Larry Kudlow Show. Steve Moore substituting, but I promise Larry will be back next week.
Yeah, sure thing. Hey, you sold that car yet?
Yeah, sold it to Carvana.
Oh, I thought you were selling to that guy.
The guy who wanted to pay me in foreign currency, no interest, over 36 months? Yeah, no. Carvana gave me an offer in minutes, picked it up, and paid me on the spot. It was so convenient.
Just like that?
Yeah.
No hassle.
None.
That is super convenient. Sell your car to Carvana and swap hassle for convenience. Pickup fees may apply.